Hello, entrepreneurs. Joe DeCharis, CPA, coming to you live from downtown Flushing, New York, for another amazing episode of How to Win at Business. And tonight, we're going after the IRS directly. We're not wasting any time. If you're watching live, people, please give me a hashtag live. If you're watching the replay, give me a hashtag replay, because it fills my ego knowing that people are actually listening. So thank you for that. And if anything I say resonates with you, if you have a tax question, an accounting question, if you want help trying to find money any way that we can, book a chat with me, go to timewithjoe.com. And also, before I forget, join my mastermind group. It's free. We learn a lot. We connect. We have fun. It's on Saturdays at 2 p.m. Eastern Standard Time. So please join. You have nothing to lose and a lot to gain. And also, we have an event coming up on June 15th. I put the link in the chat box. So again, that's another free event. It's all about finding your money. We're going to help you find your money because it's yours. Okay. It starts with the business, but it ends with you. We want to help you find it and keep it. That's the bottom line. That's my story. I'm sticking with it. And let's get into the training. Hi, Tish. Yes. Long time no see. Love you. Love what you're doing. Welcome to Haley's team. And let's talk about, I've gotten over the years, I can't tell you how many times people ask me for a list of what they can deduct. And I would actually try to create a list. And the list was pretty freaking long. It was too long. It was like never ending, because the more I thought about it, the more business deductions I could find. So what is a business deduction? Who defines it? Who polices it? What's that all about? Because it's really the definition of what a business expense is. And it's written in Code Section 162A. And people, I learned a long time about when it comes to marketing, nobody cares about IRC Code Section 162A. That probably goes right over your head. And that's fine. That's what I'm here for, to explain this stuff to you. The easiest way to find out is to go to Google, right? So I Googled it. And let me tell you something. It is so discombobulated and misleading that it is definitely impossible for a layperson to understand exactly what they are allowed to deduct. And that's by design, people. That's by design. You see, the IRS is not here to help us. The IRS is here to police us and make sure that we're paying more than our fair share of freaking taxes. And the truth is that business people get away with murder when it comes to taxes. And I don't mean that in a bad way. The truth is that business owners are just taking advantage of the laws. They just happen to have more time and resources to know what they're allowed to do and what they're not allowed to do. What's going to get them in trouble. And so that's what I'm going to explain to you. So, so I did my Google search. I found a lot of nonsense that made no sense, if that makes sense. And so Wikipedia, I said, well, that's a pretty, I think it's independent. I'm not getting the information from the government, because the government isn't going to reveal the truth. They're going to give you smoke and mirrors. It's like the big boys club. Okay, that's the truth. So what does Wikipedia say about it? So 162A says that a business deduction has to be ordinary and necessary for it to be legitimate. So the question becomes, what exactly is ordinary and necessary as it applies to you and your business? See, it's not a black and white case. It's not that simple. Yeah, obviously going to Staples and buying copy paper is a business deduction. But what about your boat? What about the trips that you make? What about the part of your house that's used for business? Who determines whether or not it's a business deduction? Well, the truth is that you decide. You have the right to say, this is ordinary and necessary for my business. And it's as simple as that. And I could tell you quite honestly that at the lower levels of the IRS, the audit division of the IRS, they will abuse you. They will bully you. They will disallow deductions because they will say, well, it wasn't ordinary and necessary. And what I do with them is I go to war. I appeal. I go over their heads all the way to the tax court, because the tax court is what's going to ultimately determine if the IRS is wrong. See, the IRS is not the law. They're not the law. They don't make the laws. They try to implement them. Okay? And all of their instructions, everything that they give you is confusing, and you have to either be an attorney or a CPA to understand, or an enrolled agent to understand what the heck they're talking about. And even if you understand what they're talking about, you need to have the experience of going head to head with them and calling them on their interpretation of what is ordinary and necessary. Okay? If it's personal in nature, that's what they tell you. If it's personal in nature, it's not a deduction. Thank you. I can't write off my family dinner. That's obvious. Okay? Medical procedures, unless I can prove. So if I have a medical procedure and I could prove without a shadow of a doubt that it was ordinary and necessary for me to run my business, I'm taking it. Okay? And the final arbiter of that deduction is going to be the tax court, not an IRS agent. So that's what we got in our favor. So one of the things, so I'm going to show you, so this is one of those bogus IRS, I don't know what they call it, the white paper. They try to go into detail about what they're trying to say. And if you look at this, I can paraphrase it for you, but basically they're saying, what I just said, it has to be ordinary and necessary during the taxable year, blah, blah, blah. No deduction is allowed for personal living or family expenses. So they're basically telling you if it's personal in nature, you can't deduct it. So again, the question becomes, when is it business in nature and not personal? It's not personal, right? It's business. Okay. So they go on to talk about, you can't deduct if you have a business or a job, right? Let's keep this to a business, and you have an office. So your first trip, your trip to the office is considered personal. It's not deductible because what they consider that is a commuting expense. So what they also say here is, where is it? They go on, it might be further down, but basically they say, however, However, once you make that first stop, all the other stops, as long as they're business related, are deductible. Well, what if my first business stop is right next door? And every day I check in with my client who lives next door and we review their books. And then the rest of my stops are all business deductions. And this is the kind of twisted mentality that fools people. It fools people. And the truth is, if you're doing your business right and you have your taxes prepared correctly and everything is you are in compliance, the chances of you getting audited are slim. So you want to be stealth. You want to do things legally, but you also want to fly under the radar. And that's another thing. We're going to be covering that in my webinar on the 15th. Now, one other thing that I found is, and this is public knowledge, and I have a bunch of these, is this is public record. This is the how the IRS trains their auditors to audit you. So if you're going to get audited and you have business deductions, you can know right away what they're going to ask you and what kind of documentation they're going to ask you for. And what's, and you don't want to have to go through an appeal. You want to, if you do get audited, you want it to go smoothly. So if you're prepared, if you're organized, you'll see what they're going to ask you for. What they want is files, they want records, and that's what they want. They want your books and records. So what are books and records, folks? Because that's what it comes down to. And with our CFO package, we help our clients create books and records, because in the end, that's what's going to protect you. But for a better reason is it's just good business practices. You got to know your numbers. And if you're not doing proper bookkeeping and accounting, there's no way you're going to have a good foundation for your business. So books and records, in a nutshell, documents tells the story of your business. The more neat and organized it is, the easier it is for people to see that you're running a business. And that's what it comes down to. Everything is deductible unless it's personal in nature. And you saw exactly what the IRS said was personal. If it's for your family, if it's everything else is deductible. It's simple. You draw a line in the sand, and when you look at your expenses and you see these are obviously personal, okay? They're obviously personal, so I can't deduct it. If you have any questions about what you can deduct, if this didn't answer your questions, go to timewithjoe.com, and I'd be happy to connect with you and explain in more detail. All right, God bless, over and out, and I will be back again tomorrow with some more interesting facts and information.